The currency market, or FX market, is where global currencies are traded. Think of it as a vast, digital marketplace connecting banks, corporations, and individuals worldwide. It operates 24/7, setting exchange rates that fluctuate constantly based on supply, demand, and world events. This market is the backbone of international trade and investment. For example, a Korean company buying U.S. parts must exchange won for dollars, while foreign investors buying Korean stocks need to purchase won. A stable currency market ensures smooth transactions and builds global investor confidence, fueling economic growth and job creation. Central banks use the FX market to manage economic policy, sometimes intervening to stabilize their currency's value. A currency that's too strong hurts exports, too weak, and imports become expensive, fueling inflation. Stability in the FX market is crucial for everyone, from corporations to travelers. Ultimately, a currency's value reflects global confidence in a country's economy. A transparent, well-functioning FX market signals economic strength and integration into the global system. For South Korea, a major exporter and tech hub, meeting international FX standards is vital for its economic future. It's not just about finance. It's about national prestige and prosperity. That's why South Korea's currency market reforms matter on the world stage. To understand South Korea's cautious approach to its currency, we must revisit the Asian financial crisis of 1997-98. The crisis began in Thailand and quickly spread, devastating economies across Asia, including South Korea. As investors fled, the Korean won lost over half its value, and companies with dollar debts faced bankruptcy. The government's reserves nearly vanished, forcing a $58 billion IMF bailout. This painful episode led to strict currency controls, limited trading hours, and heavy regulation to prevent another crisis. For over 2 decades, the won was traded in a tightly controlled environment, making it hard for global investors to access. These measures shielded the economy, but also limited its growth potential. As South Korea's economy matured, these restrictions became barriers to further development. The country's experience left a lasting mark, shaping its financial policies for years. But now, with a stronger economy, South Korea is rethinking its approach. The old rules, once necessary, are now seen as obstacles to global integration. The stage is set for bold reforms. In global finance, MSCI's market classification is a powerful signal for investors. South Korea is currently labeled an emerging market, grouped with countries like China and Brazil, implying higher risk and less accessibility. Developed markets like the US and Japan attract more investment due to their stability and openness. An upgrade to developed market status would unlock billions in new investment from global funds restricted to such markets. However, MSCI has repeatedly cited South Korea's restrictive currency trading as a key barrier. Limited trading hours and difficult access to the won have kept the country from advancing. For South Korea, earning this upgrade is about more than prestige. It's about economic opportunity. The government's recent reforms are a direct response to MSCI's feedback. The goal: make the won as accessible as any major global currency. South Korea is launching its most ambitious financial reform in decades, aiming to transform its currency market. The government's roadmap includes dismantling long-standing restrictions and making the won more accessible worldwide. President Lee Jae-myung's administration has prioritized these changes, seeing them as essential for global competitiveness. The plan goes beyond longer trading hours. It's about building a full ecosystem for offshore won trading and financing. Other reforms include aligning short-selling rules with global standards and requiring more corporate filings in English. These steps are designed to boost transparency and attract international investors. The government's commitment is clear. A detailed plan for MSCI upgrade will be unveiled by the end of 2025. South Korea is moving from a defensive stance to confident global engagement. The message: the country is ready to open its doors and embrace the benefits of integration. This marks a pivotal moment in Korea's economic history. The headline reform is the shift to 24-hour trading for the Korean won, a monumental change. Previously, the onshore market was open just 6.5 hours daily, limiting access for global investors. Starting July 2026, the interbank market will operate around the clock 5 days a week, aligning with major currencies like the dollar and euro. This removes a major barrier for international investors and makes the won more competitive globally. The transition began in 2024, with extended hours as a pilot, paving the way for full 24-hour trading. Upgrading trading systems and regulations is a complex task, but it's essential for global standards. The result: increased liquidity, reduced volatility, and narrower spreads, making transactions cheaper and more efficient. For Korea, one of the world's largest traders, this is a logical step toward deeper global integration. The move signals a commitment to openness and modernization. It's about more than convenience. It's about solidifying Korea's place in the 21st century economy. The world will be watching as the won joins the ranks of truly global currencies. This is a new era for Korean finance. Extending trading hours is just the start. South Korea is also opening its currency market to global players. Registered foreign financial institutions can now trade the won directly in the onshore market, ending the need for local intermediaries. This change boosts competition, liquidity, and efficiency. The government is streamlining registration and cutting red tape to make market entry easier for reputable global institutions. Plans are underway to allow offshore won financing and trading, letting companies borrow and transact in won outside Korea. This will make the won more useful for international trade and finance, increasing global demand. These reforms address the core criticisms that have held Korea back. They represent a profound shift toward openness and trust in market forces. By welcoming global investors, Korea is betting on its economic strength and stability. The country is ready to join the world's financial elite. South Korea's FX reforms promise major economic benefits. For investors, 24-hour trading and direct market access mean lower costs and greater efficiency. Korean assets become more attractive, likely drawing in long-term global capital. Export-driven businesses will enjoy easier, cheaper currency conversions and more predictable exchange rates. This boosts profits and supports investment in innovation. The government could see improved credit ratings and lower borrowing costs. A more dynamic market means more economic activity and higher tax revenues. A stronger, internationalized won gives Korea more autonomy in monetary policy. These changes create a virtuous cycle: more investment, stronger businesses, and a more stable economy. While risks remain, Korea's mature economy is ready for the challenge. The potential rewards are long-term prosperity and global integration. Korea's reforms come amid strong economic momentum and bold ambitions. In 2025, the Kospi stock index soared 76%, its best performance since 1999, reflecting investor confidence. The won also rebounded, gaining 2.3% against the dollar after years of decline. These gains were fueled by market-stabilizing measures and optimism about reforms. Looking ahead, exports are projected to rise 4.2% in 2026, driven by global demand for Korean semiconductors and high-tech products. The government aims to become a top 3 global AI power with a 5-year plan for the semiconductor industry. A $350 billion investment package, linked to a U.S. trade deal, targets strategic sectors like shipbuilding and nuclear energy. These initiatives show Korea isn't just reforming finance, it's investing in future technologies. The country is positioning itself as a leader in both markets and innovation. The world is taking notice of Korea's upward trajectory. The next chapter promises even greater ambitions. With reforms underway, the focus shifts to execution and results. The world will watch as Korea launches its 24-hour FX market in July 2026. Regulators must ensure a smooth transition and guard against volatility. MSCI's decision on market status will hinge on the success of these changes. For Koreans, These reforms could mean more jobs, prosperity, and a stronger currency abroad. Risks remain, but Korea's experience and resilience offer confidence. For global investors, Korea is now more accessible and attractive than ever. The won's internationalization could reshape trade and investment flows. Korea's journey from crisis to confident global player is a model for others. The world is watching to see if this bold gamble pays off, welcoming Korea to the club of developed financial markets.